with the next part of our program. I'm going to invite the debaters to take their seats so we can get going. Bob has already taken off his jacket, as you can see. Where is Steve Rasmussen? Take your seat, Steve. Steve Rasmussen has taken off his tie. Actually, he hasn't worn a tie since I don't know, 1.0, something like that. Yeah, right. Joyce and Stefan, please take your seats. Do you know what order you're going to be in? We need Joyce and Stefan on these two seats, and Steve and Bob on those two seats.
I'm thinking I should take off my jacket.
Yeah, right. So, friends, I want to begin by thanking our speakers from the first half of the day for being a great warm-up act for this panel here. We're going to overcome any vestiges of Canadian politeness.
That's what you're doing next. Yeah, I'll show you what it is.
Here and
this is something else.
break open the debate on what I think the discussion already has demonstrated to be a central issue for the future of the sector. We have with us today for this session some very distinguished figures in the sector, some of whom you've already met. Their bios are on your tables. They have agreed to dispense with their own convictions and debate the following resolution. Be it resolved that technology will be the game changer for increasing financial inclusion. Be it resolved that technology will be the game changer for increasing financial inclusion. Joyce Lehman and Stefan Staschen have agreed to speak for the affirmative, and Steve Rasmussen and Bob Christen will be speaking for the negative. We are going to be following the standard Oxford Rules of Debate, in which each side will get 5 minutes to make an opening statement. Then the second speaker will have an opportunity to add some arguments to bolster their colleagues' comments, but also to skewer the weakest arguments of their opponents, but not their opponents themselves, I hope. And then, after hearing from both sides and both speakers, we will invite the crowd into the debate. And each of you will have an opportunity in interventions of about 30 seconds to make your views known. You're not to ask questions. This is not a panel that is to be questioned. This is a side to be signed up for. So you can either identify an argument which has not yet been made, elaborate or amplify an argument which you think has been made but poorly made by the people on this stage, or you can point out what is the obvious and glaring error in the logic of the side that you oppose. So we'll open it up for the crowd to participate in the debate, and then finally we will have the sides sum up. One from each side will sum up their perspectives and provide a rousing crescendo of a conclusion to their debates. We will then vote and debrief a little bit. Before we start, let's just see how effective a debate group we have here. I'm going to take a straw poll right now with a show of hands on this resolution. Be it resolved that technology will be the game changer for increasing financial inclusion. How many people in this group right now, before you've heard this debate, think that in fact it is true that technology will be the game changer for increasing financial inclusion? Put up your hands if you think it will be.
Good.
For you.
This is too easy.
I would say about 60%. Would you agree with me, guys?
Oh, I think it's much.
Put up the hand. Put up your hands.
Much more.
Much more than
I think
that.
it's 80.
It's 70. Yeah.
Wrong people to
80,
ask.
it's 80.
And
Yeah.
everyone who thinks it will not be the game changer, put up your hands. It's basically Steve Mason.
Do you dare?
Fine. So I would say that this crowd is overwhelmingly in the camp of the affirmative, and it is therefore to Steve and
Really too
Bob's
bad. I mean, they're gonna have to change their minds.
now duty to convince us otherwise, and for Joyce and Stefan not to ruin their advantage, which appears commanding. Now one thing that technology is a game changer for is keeping time. So I will be ruthless, just as you will be in your argumentation. To keep you to your time, I'm going to give you 5 minutes to make your opening remarks. And we're going to start with the first affirmative speaker, Joyce Lehman. Be it resolved that technology will be the game changer for increasing financial inclusion. You have 5 minutes, Joyce.
Thank you. First, let's be clear on 3 of the terms in the resolution and what we're talking about. Technology. Many kinds of technology, all of which are important, but we're proposing that the game-changing technology is that the front-end or client-facing technology, whether that's mobile phones or whether it's a card-based system. Having the required back-end systems is important, as is any range of technologies that I could mention. But in and of itself would not be the game changer. It's when you get the technology, this is about the clients, it's getting the technology in the hands of the clients that is available to be used at their discretion. So, technology, game changer. We're referring to an intervention that has such powerful potential that it could approach a tipping point for digital financial transactions in developing markets and thereby drive new and creative solutions to serve those currently unbanked. Financial inclusion. The ability a person is financially included when he or she has the ability to conduct financial transactions within a formal and regulated framework connected to a personal account, whether this is a bank account or an e-wallet account. Those are our working definitions that I would propose. So within those parameters, will technology be the game changer for increasing financial inclusion? And the answer is yes. First of all, using the front-end technology directly addresses 2 of the key barriers faced by the industry today, and we've heard about those already: cost and proximity. A third-party agent in a village with the capacity to facilitate those digital financial transactions dramatically reduces the costs for the provider institutions and increases the convenience and the cost for the client to enable the accessing services at her doorstep. Page 293 in the book, Chapter 12, shows the comparative monthly costs associated with managing a transaction account for 5 different providers. And there is a considerable reduction. Cash is a major cost driver. It's a major cost driver for institutions. It's a major cost driver for clients. The restriction of having to deal with only cash. Secondly, the microfinance providers in the industry, we cannot do this. They cannot do this by themselves. Doing it right and with the end result that we all want requires new partnerships. The private market players have already done a lot of the work in making the technology available. Not only mobile phones, but voice biometrics, mobile imaging, location data, payment applications, card readers. It's already done. It's out there. Regulators are getting into the mix and in some cases are open to suggestions on how this can increase financial inclusion for the people we care about. Governments and businesses are taking note and can drive millions of transactions and bring in the unbanked with direct payments into their mobile wallet or bank accounts. Previously skeptical bankers and other service providers are beginning to stir out of their preconceived notions about the poor and see the market potential which will provide the business case. The microfinance providers then can focus their energies on how to use this available technology to better serve their clients, discerning their needs, serving as advocates for pro-poor policies, and developing useful products to meet those needs, the products that can ride on the back of the digital framework.
Thank you, Joyce. And applause, I think, are warranted. So, Steve Rasmussen, the gauntlet has been thrown. Joyce has defined her terms with precision, laid out the economics with elegance, and even cited to specific pages in the new microfinance handbook.
Can't say anything about that.
Can Steve Rasmussen even begin to rise to the debate challenge? The next 5 minutes will tell. Steve, 5 minutes.
I don't own a tie. I am speaking with conviction, and I didn't bring my sword with me. But the resolution says, be it resolved that technology will be the game changer for increasing financial inclusion. And our opponents define financial inclusion, I think, in an incomplete way, so let me try again, straight from the book. Financial inclusion is the state in which all individuals and businesses have the choice to access and the ability to use a range of appropriate financial services responsibly provided by institutions permitted to offer such services. That is a pretty tall order. I don't think technology can do that. Technology provides, it signals potential, it provides opportunity, but if Joanna's book tells us anything, it's that increasing financial inclusion is a complex, human-centered process in which technology can only play a supportive role. I want to illustrate this with 3 examples out of the market ecosystem. And I'm going to go out to the world at large and beyond the book. Brazil was the first country in the world that really pushed agent banking 12, 13 years ago. You look at what happened. You can find POS devices out to the last village up the Amazon. Sure, it's gone out there. It's reached some scale. There have been a shift to a lot of electronic payments, billions of dollars going across that system every year. But for 11 million Bolsa Familia recipients at the very bottom of society, they're all getting electronic payments, but they're a long way from financial inclusion. In fact, in some cases, going the wrong way because technology is being used by consumer credit providers to try and give them more credit cards than they could ever get along with. And we're back today to try and figure out how to include these people in the financial system. India's facing the same thing. They went to electronic payments, said it had to be in accounts, and they're not being used. In Pakistan today, which is considered one of the success stories, we have services like EasyPass and Omni. You know, a lot of the transactions across these systems are over-the-counter transactions. They're not using the mobile wallet, which gives you the full range of things you could do. People are going into an agent, asking the agent to do a transaction that then has to go out at the agent on the other side. We've got limited financial inclusion. We've got a lot of use of technology and mobile telephones. There's growing evidence that who's doing over-the-counter versus who's doing mobile wallet. Over-the-counter is primarily poor people, older people, less literate people. The second biggest mobile network provider in Pakistan has data that shows that 40% of those people who have a voice connection never do a text message. And it's the same market segment. So the point is, I think the voice of poor people is not being heard in the technology world. A second illustration from regulators. Most regulators do not support game-changing technology-enabled models. Kenya today, we talk about Kenya, we talk about M-Pesa, we talk about the success. The interesting thing is it's not regulated by the central bank. If anything, we got success because they stayed out of it. But that's not the case most places around the world. The two biggest countries in the world today, in population terms, China and India, the regulators are afraid of innovation. They want to keep the banks at the center of the system. They don't want third parties in. They don't want innovation in. They don't want mobile network operators in.
30 seconds, Steve.
So again, we're seeing people stop game changing when people could enable it. In businesses, we see the same thing. People are in positions of power still deciding what happens. Largely, they're doing bank-based systems. We're not seeing technology take off and really push financial inclusion.
Ladies and gentlemen, Steve Rasmussen. Well, friends, the battle lines have been drawn with force and eloquence. Who knew it would be a battle of citations to the Microfinance Handbook, which, if you have not yet picked up your copy, is available on the side. Steve has given us some very specific examples and has effectively dismissed his opponents as simple-minded and naive.
Is that all?
But they are not worried. If anything, the mad scribbling that Joyce was doing throughout this session shows the indignance with which she is meeting these flimsy arguments from her opponents. And to help bolster their side's case, I now invite the second affirmative speaker, Stefan, to make his case. Stefan, you have 5 minutes.
Thank you. First, I must say I'm confused. The head of CGAP's technology program tells me that technology is not the game changer. Working as a consultant for CGAP, I'm wondering, can I speak openly?
No, you lose your job.
I lose my job, okay. So I wanted to propose to split the resolution, if I may, and into two parts. One is whether technology has the potential to be the game changer, and the second one is whether the potential will actually realize. So first, a few words about the broader use of technology. Although I agree with Joyce that the back-end part is probably not the game changer in and of itself. But I wanted to give you two examples. One is computer systems, MIS of microfinance providers. I strongly believe that only if providers are able to produce accurate and timely information about and reports about their operations, they will be allowed and able to offer more sophisticated products. And we talked about this in the demand session. We want them to go into savings products. We are interested in microinsurance as a much more complicated product to offer. And I also believe that regulators will only allow them if they can produce such kind of information, and they need technology to do that. The second example is not that's necessarily on the back end, but broader on infrastructure. Electronic ID systems. There are a couple of countries which have been at the forefront of this, big countries like India and Pakistan. And Russia has actually started the process. And I believe it's very important to increase access because it reduces cost of identification of clients and also helps with the requirements on anti-money laundering. But let me focus on front-end technologies. And here I believe that the main question is about customer adoption. And there you often hear negative views. And I agree the answer is not that clear yet, but there are some positive signs, and I want to list some of them. So let me start with anecdotal. I've lived for many years in Kenya, which was mentioned here quite frequently, and we had a nanny who used M-Pesa not only to transfer money to her relatives up country, but also to pay her suppliers for starting her new business in dried fish and pottery. Both businesses failed, but that's for other reasons. But I think it shows you that that even poor people know how to use the system, how to make use of technology. Don't give up on them too quickly. This is anecdotal, but I think there is also increasing research that shows that getting more comfortable over time, that users are getting more comfortable over time, and they leave more money in their accounts if they know it works. So that was the story by Candace, the excess savings they keep in M-Pesa. Also, users learn from each other. The question of critical mass. If you have a critical mass, you talk to your neighbors, and if you see they use it, they might also use it. There's technological progress, which is very important, so customer interfaces become more user-friendly over time. There's the emergence of Silicon Valleys in the South, or they call it Silicon Savannah, I believe, in Nairobi, where you have technology providers with a local knowledge of the industry, so they come up with the right solutions for their market. And lastly, there is insights from behavioral economics, which tell you how people change their behavior and how you can actually make them use technology-enabled services. The idea of human-centered design. Some of you might have read the recent CGAP blog on that. So the potential is there. The second part of the proposition is, will it materialize? One question about this is whether there will be incentives to try hard enough. And I think Bob mentioned in the morning, bankers haven't tried hard enough yet. So don't give up too easily, but it will be important to follow a big push. Positive sign is there's general prominence of financial inclusion in the public debate. So that makes me positive, makes me think positively about this. And I believe there are different forces at work that are to the advantage of technology. One is the pressure to increase traceability of transactions for anti-money laundering reasons, and technology is the best way to do that. And the other one is we heard about new products which are more needed now. It's not only about microloans, so it's about consumption smoothing. It's about flexible products, less standardized. It's about helping Nelson. And if you want to do that in a cost-effective way, there's no other way than doing it through use of technology. Thank you.
Stefan. Well, thank you, Stefan, for resuscitating your case with the very deft rhetorical move, I might say, of separating the ideal from the real and arguing that both are possible. So I think the affirmative side has now laid out its case with great force. But they have yet to encounter Bob Christen, who will now, on behalf of the negative side, not only put forward additional arguments, but also identify the weak underbelly in the argumentation of his most worthy opponents. Bob.
So I love the irony of being in this position. Just a couple framing things. Number one, version 1, figuring out that clients can repay. Version 2, institutions can be sustainable. Version 3, where are we going to this question? How can we be really, really useful to all the kinds of things that clients need? I agree with Joyce's framing on technology in this conversation being the POS-driven kinds of terminals. I would like to make sure that we're talking about the people living under $2 a day and not the missing middle of people making $5 or $10 a day, around which financial inclusion is going to proceed just fine, thank you, without us. I'd like to keep the focus on the all people being people under $2 a day for this conversation, if possible. And I'd like to talk about higher level banking services, a savings account, a loan, insurance, not simply paying a bill. Okay. I think people who believe we're heading toward a digital society are living in a fantasy world. I don't see this happening anytime soon. I'm not sure it's a good thing. The math doesn't work. The only reason Nelson could go to M-Pesa, which is, by the way, an anomalous experience in one country in the whole world, is because the pricing model is completely off. He's not paying to deposit each time he walks in. The pricing structure is wrong. He only pays when he withdraws, so there's a huge incentive in the system to keep dropping off money. If there was a full cost pricing model, Nelson would be excluded. And so would most people living under $2 a day with those very small transactions. The math isn't there yet. I don't see it getting there anytime soon, number one. Number two, financial flows that poor people have. I think the Portfolios of the Poor book is brilliant at pointing out how massive the flows are compared to the income at any one point of time or balances at any one point in time. It's, I think, the signal insight in that book. If you look at those flows and say, in my digital world, wow, I'm going to attach a fee to $10 billion worth of transactions of the poor, and they're going to want to do that. They're going to want to pay 10% of that volume in fees for the ease of moving money around. I just don't think so. The volumes of digital transactions in Africa, I was just checking with my colleague, my teammate here, it's what, one digital transaction for every 90 days for an average family in Africa. The volumes are so distant that we would need to make these systems viable, reaching out to poor neighborhoods. I think that's a fantasy world. In the United States, I think we've just passed maybe 50% of all transactions being digital, or something like that, just now in the US. So I think those numbers absolutely don't work. No time in our lifetime in Africa, we're going to have more digital transactions than cash. There are tax implications. I don't know about you, but frankly, digitalizing transactions means they're taxable. You're in the informal economy. What you're basically saying, your hypothesis is that people who live in the informal economy are just excited to wake up every morning with the opportunity to pay tax to the government. Digital transactions will be taxed. That will be a massive disincentive to digitalize your financial life. I don't know how the proponents of a digital world are going to get past that problem, because the whole point of being in the informal sector is not to pay taxes, but rather to be a regulatory avoider. So I don't know. In my mind, I think that this is not going to work, and people are going to give up. And they're going to stop trying to reach down market, and we'll get financial inclusion for the $5 to $10 a day group, because they got enough cash flow to make those things viable. But getting this out into the poor neighborhoods, don't see it. What's going to be the game changer? People who care in organizations that care about the target population, they're the ones that are going to drive whatever solutions are going to happen. MFIs care. As I mentioned earlier, I'd have thought commercial bankers 20 years ago were going to do a lot more than they've done. Today, our business is firmly in the hands of double bottom line institutions, because they're the only ones that give a crap about poor people. Technology doesn't care. Technology is not looking to serve poor people. Technology is looking to make money wherever it can make money easiest. I don't think it's going to get it done. I think the game changer are microfinance institutions and the community that cares about poor people caring enough to drive technology where it needs to go to be helpful. But the game changer are people, our belief systems, and organizations that give a hoot. Thank you.
Ladies and gentlemen, Bob Christen. Well, there you have it. The arguments have been laid out in front of you with care and with elegance, and it's now to you to participate. Here's how we're going to proceed. What I'd like to do is two things. One is I'd like you all at your tables in the next 2 minutes to discuss the following question. What one or two arguments have not yet been made on either side of this debate that you think must be made? So let's have this discussion at your tables. In the meantime, I'm going to ask the debaters to consult with their teams to make sure that there are no missing arguments that they still want to make when I call them back to debate after the audience has had their opportunity to participate. So you've got 2 minutes to discuss this, and I'm going to open it up to the crowd. So go.
So our mics are off, right?
Mics are off? Okay.
Yeah, kill these mics. Kill their mics. So guys, you're not going to respond in a formal way, right? But you will be to integrate what you say into your plan. So, huddle away. All right, friends, I'll bring you back together if I might. I see the conversations were just as animated as at your tables as they were up here on stage, which is good to see. Indeed, some are still going on. All right, let's hear from you all. The idea here is, what we'd like to hear from you is an argument on either side of this debate that you think has not yet been made or has not been made adequately, or an argument that has been made which you think rests on some kind of false or flimsy premise. So let's open it up. Who's going to start? I was watching who was most animated during this private discussion. I will call on you. Chris Eaton is always the most animated. Chris Eaton from
Thank you very
WUSC.
much. I guess the argument was made on the basis of existing technology. 20 years ago, we never thought that people in rural Africa would have access to cell phones like they do today, and that they would use them in the variety of ways in which they do. So basing your argument on the basis of what exists now, I don't think is helpful to thinking about how technology may actually increase the access to financial services to the poor in the future. That it's in some cases even difficult to foresee what the future will be in 5 or 10 years' time. So that's an argument for a little bit of optimism around what technology might do in terms of financial services.
So Steve and Bob's technological horizons are
Luddites.
Terribly limited. They are Luddites. They haven't accounted in their argument for the possibility of continued and disruptive technological innovation. Thank you, Chris Eaton. What other arguments have not been made or have been made and have been made weakly? Steve Mason from AKF Canada.
Hello. In the earlier presentation, Joyce made a comment where she said one of the challenges is getting services to where the people are. I would reframe that and say that the key supply challenge is getting services where the people aren't. That is, those sparsely populated rural areas that are generally excluded from financial services. I would argue those same areas are also excluded from technological advances and technological innovation. May not necessarily have cell phone coverage, may have sporadic access to electricity. So I would say that the technological solution will continue to exclude the same group of people who are currently the core of the excluded market.
Right. So the haves continue to have, and the have-nots continue to have not. Excellent. What other arguments have not been made that need to be made, and with urgency and force? Candace Nelson. Yeah, right.
Okay, so I'm going to raise again the choose and use phrase that I mentioned earlier. I think that the research shows there can be rapid uptake in mobile technology and account openings and very low usage to date. And I don't see technology itself changing that particular equation. I think something in addition to technology is needed. It's very easy, particularly, you can ask any 8 to 25-year-old, they can do anything on that keypad. But do they understand the value of savings? Do they understand when to use savings or to take a loan in order to respond to an emergency? Do they have the financial knowledge they need to use the financial services that are available to them on the keypad? That's one question. And the other question that I think the con side did not raise and should be raised is the issue of consumer protection. And it goes along with this choose and use. What happens when you make a mistake and you punch in your numbers and you punch in the wrong account, or you punch in the wrong amount, or you make any kind of mistake? Do you have the confidence, do you know where to go to correct that mistake? Do you have the confidence to go there? What kinds of consumer protections are in place for people around the basics of the technology, PIN confidentiality, mistakes, et cetera, et cetera? So consumer protection, consumer service, and consumer education. So, technology does not address those things.
So you can take the horse to the water, but they may not drink. And what if they fall in? All important things that our friends Joyce and Stefan seem to have simply forgotten about altogether. Right here, introduce yourself and where you're from.
Hello, Jennifer McDonald, Women's World Banking. We feel that the con side missed the important point of product development, that the game changer may not be so much the technology itself, but what you're able to do with it and how you address clients' needs with that.
Right. So technology is just the highway. What's going to be the car? That's where the interesting debate actually is. Can we build better cars? Doesn't matter what kind of highway you have. Thank you, Jennifer. Right there, David. But you should introduce yourself.
Dave Nosback. Technology is the breakthrough.
It is.
It is, provided those of us in this room influence bank regulators to support innovation rather than protect against it.
Right.
And if those institutions that Bob talks about who care are supported in initiating innovative uses of technology among those who are $2 or less.
Right. So David is making a nuanced argument, and we're not actually sure which side of the debate he's coming out on. The technology, in fact, will be the game changer, but it is not automatically the game changer. Many other things, indeed, have to happen simultaneously, which sounds like a version, I think, of the Bob Christen argument. Okay, what else? There are other hands up, and I'm going to start cold calling. I saw a lot of animated discussion. Right there at the back. Please introduce yourself.
My name is Derek Cameron from the Canadian Cooperative Association.
Welcome.
Just picking up on the last comment, I'm not always sure that that the poorest of the poor are the best people to always innovate on. So to come back to the negative, they were saying if uptake is fairly low, is lower than expected, it's taken a long time to get up to 50% in North America. We can actually afford to lose a few bucks if the innovation doesn't work out, but I'm not sure if the people who are making $2 a day are where we should be kind of forcing our innovations on. And also in terms of technology, I mean, I'm not sure if it's resilient enough to withstand losses. So I mean, there's been bank failures, people can continue to bank, but I'm not sure if there's failures, particularly I'm surprised here that M-Pesa is not regulated. If there's a substantial failure in M-Pesa and there's losses, I think that will scare huge numbers of people away from technology permanently.
Right. So technology always has its fragilities, and all we need is one massive failure, and this whole experiment will be taken back by some decades. Thank you. There was one other at the back, right here.
Hi, Leslie McKinnon.
Welcome, Leslie.
Thank you. We were talking a bit about, well, the pro side was talking about front-end technologies, and I think that there's still an important space for back-end technologies in increasing outreach and sustainability and scalability when MFIs are coming online and don't have those technologies in place. When they go to put them in place, sometimes that can cause a huge gap in productivity. Maybe the programs can't even operate over that certain period of time while they're implementing those systems. So they are efficient in increasing, in some cases, scaling up and increasing access to others. And also that we're kind of making a pretty heavy assumption here that people are going to use the technologies the way that we've designed them. Right. One of the really exciting things that came out of maybe the Grameen Phone program or other programs wasn't so much just the access to a cell phone, but what they did with it. They weren't just calling people, they were looking up agricultural information that increased their crop yields, and it's also a social capital gain as well. If you have access to a technology that increases your sense of community, that increases your ability to connect with others, that's a really important outcome in and of itself that does have an impact, but it's maybe not one that we designed specifically in terms of credit or credit delivery, but it's part of that process of poverty alleviation. So those value-added aspects, I think, need to be taken into consideration a bit as well.
So this is kind of, I think, argumentation for the affirmative side of this debate, saying not only are the back-end technologies a bit more important than perhaps they're already saying, but that there are a whole suite of weird and wonderful unanticipated outcomes that comes with empowering people with technology and technological tools that opens up vistas which we can never predict. Great. Ray at the back there.
Deki Kipuka. I agree that technology will be a game changer, but we have to have in mind that domestic governments have a key role to play in in terms of setting up an enabling environment where in the private sector, let's say the banking sector and the telecommunication sector, will have to operate in order to allow more access to for clients.
Right. So this is a companion to David's point here, which is to say, I think that technology is all well and good, but the regulatory environment and the other policy environments in which it is embedded is actually determining whether or not it will be made available to the poor or not. So I think, again, for Steve and Bob, take note. Ray at the back there.
Hi, Rob Middleman from the Sprott School of Business.
Welcome. Oh, School of Business. Excellent. Robin, come on down.
You'll be surprised to hear this, but unless we're talking about artificial intelligence or robots taking over, to expand on Bob's argument, it's going to come from people who care. It's going to come from the people that care to create the technology, because the technology is not going to create itself. So it's going to have to come from the individuals who are making the choice to, and that's where it's going to start. The game changer is going to be with people who care and not the technology that those people create.
Right. So, from the mouths of the business school to, yeah, right. That is to say that technology will never be the game changer. It'll simply be one of the tools in the arsenal of the people who care to innovate in a continual way in the face of the challenges to expand access to the very poor. Thank you. There was something right here, exactly. This was a very animated table. Even though there were only 3 people, the animation was like of 7.
Good afternoon, Stephanie Hoey. One point that wasn't brought up was the demographic bulge of youth and youth's demand for technology and use thereof. Right. So that was one point that we discussed.
Right. So the affirmative side has demographics in their favor. The intuition is that youth can do this and will do this at a level of intensity and frequency that will be far ahead of other demographic groups. That's where the bulge is. So if you fast forward this movie 10 years, that's where financial inclusion nirvana will sit. Yeah. Right here.
Okay.
Take your word.
I wonder if,
introduce yourself.
My name is Janet Lee Anderson from Opportunity International.
Janet, welcome.
And I wonder if we could agree on that innovation is the game changer and technology is part of that. So from that perspective, 2 of the things that Opportunity has done is that we actually get our microinsurance out to the clients that are $1 to $2 a day via cell phone companies. And so that has allowed us to expand very, very rapidly to consumers who really, really need microinsurance and yet don't necessarily know what it is yet. And it becomes a loyalty program. So it is technology, but more to the point, it's actually an innovative way to get technology out there.
Right.
And then if you also look at smart cards, and I know there are different organizations that use biometrics on smart cards, we talked about can we afford to innovate with the poor and with those that are at $1 to $2 a day? And I think I would submit to you that we can't not afford to innovate for the poor. And so these smart cards that allow us to use their thumbprint or forefinger and the biometrics actually are more inclusive because they don't have to be illiterate. They don't have to have a signature. They actually are more inclusive. Someone mentioned client protection principles, and actually if you're using your thumbprint, again with a biometric card, even if someone steals the card, it's more secure for the client. So there's lots of examples of, I'm not going to go into all of the details, but in some ways I really believe that we need to use technology to innovate for the poor, and they're depending on us to do that.
Well, a noble attempt to try to build consensus, but one which I will not allow to succeed, not yet at least. The debate is not yet over. But a noble point, or an important point nonetheless, which is this about technology or is this simply about innovation? What we need is a bunch of new ideas to confront difficult problems, technologically or not. It just might be clever ways of doing things. So ruminate on that, debaters. Any last comments here at the back?
Judith Nihorimbere, Micronutrient Initiative. So we have heard from different views here, but we may not know what the technology will bring us tomorrow, but based on what we have and what we know, what we are doing, using today, I'm wondering what is the cost difference. If you compare the classic way of doing transactions and the technology-based transactions, what is more efficient? What is less costly than the other? So that's what I need to understand in order to make a choice, to make a decision.
Right. So if I might, a unusual and shining moment of clarity here, that at the end of the day, it's costs versus benefits, and if technology allows you to minimize your costs and increase your benefits, it's going to win. Yeah. Maybe. We've got time for one last question or comment. Oh, maybe two last, and maybe 8. Who knows if I'm persuaded. Right here. Okay.
This may have been in the background of one of the other comments, but we feel that the issue of game changer lacks, both sides have not addressed the question of time frame. So while Steve raised the issue of in Brazil, there are now agents, all municipalities have an agent with a POS device, but they don't have these other services. Perhaps in 10 or 20 or 25 years, those services will have been built in as a result of this first step. And at the same side, neither side addressed this time frame issue. So in 100 years from now, maybe there'll be another game changer, but we think that that's an important issue in this debate.
Well, at a simultaneously jab at all 4 of them, the question of timeframes left untended to by all of you debaters. Are you talking about game changing in a week, in a month, in a year, in a decade, in a century, in the long term? We're all dead. So, I mean, what do you guys say? And we've got one there, and then one there. All right.
Odette Gauthier with Care Canada.
Welcome.
I would like to add to the idea of that we need innovation, we need also partnership. I think
partnership, is that what you
said?
said? Yes.
Partnership. I think we agree that the technology will not be the key. It can be one key, but it's also a very strong incentive for financial institutions and private sector to explore this market of financial excluded people. In some countries, the financial excluded represent sometimes 70% of the market in terms of, of the potential. So we are testing in Pakistan with Telenor, which is a cell phone company, and Tamir, which is a microfinance institution, a new model where there is a partnership where each stakeholder play a value added in bringing some financial inclusion to the very poor. And I think the telephone technology has been a very strong key incentive for financial institutions to explore that possibility because of the proximity, because of the reduced cost in terms of the infrastructure that needs to put traditionally in place. So I think partnership has not been mentioned, but it's very important when you think about financial inclusion to create platform where each stakeholder can play a role that the other one cannot play. And this is partnership.
So I think this is a point in favor of the affirmative side, which is to say that technology will enable new levels of partnership and provides incentives and opportunities for otherwise kind of conservative players to go and reach out to the new markets. Right there, Peter, and then Rishma.
Hi, Peter McConaughey, World Bank. I would also challenge the panelists to further clarify who is going to lead this process of technology development and innovation. Is it going to be these game-changing startups? Is it going to be the telcos? Is it going to be innovative MFIs? I would argue that all of the above is necessary, but also only if you have strong government commitment.
Right.
I work in the Middle East, North Africa region, and I can tell you in North Africa, we are not going to see a lot of product or technological innovation. Why? Because the governments simply don't want it. They want financial inclusion, microfinance sectors to remain very small. They want it to be credit-driven. There's a small number of pilot initiatives, but they won't touch it. So unless you really have the regulation and commitment from the government, my argument would be that you can only go so far. But, what are your thoughts on that?
So technology will only be the servant of a strong, bold public leader. Without the public leader, there is no impact. I've got at the back and then here.
My name is Florence. I'm with Causeway Work Center, basic financial literacy trainer. Now, I didn't hear any of them talk about literacy, financial literacy training, whether it be in developing countries or even here in developed countries. And also there is, because the banks in developed countries do not believe that the poor people can offer them any services, I think there was a need for the debaters to talk about how the banks could be involved so that they can help those poor people, or the Nelsons that we were talked about, and the Roscas, where community people, they bring money together and save as one group. That could make a big difference. By the way, I'm originally from Kenya, and there I used to belong to one of the Roscas. I still belong to one here in Canada, in Ottawa, where I've been for 14 years. But our Roscas is in the bank. And we started saving $1 like Nelson. $1 a day, that was $30. And we've raised more than $30,000 because we are as a group, but we use the bank, not giving a person. And we use that money to lend ourselves. And soon we're going to use it for investing. And therefore, we need to do it not only, I don't believe that microfinance is just for developing countries. I think we need it also here in developed countries, and this is something that the debaters needed to talk about.
Great, thank you very much, Lawrence. Rishma.
I have a few questions or a few comments from our online viewers in support of the proposition. Mansoor Halani says that the fact that the US has reached 50% in digital transactions just now has no bearing on what the emerging world is capable of. These emerging countries will bypass the existing technologies and probably leapfrog the US.
Call it the Chris Eaton point.
But for the opposition, Tariq Khan is concerned that how can we possibly see technology as a game changer when the majority of the poor are still illiterate?
Well, ladies and gentlemen, you have complicated the issue beyond assistance, I think, from even these able debaters. But let me not prejudge their capabilities. It is now time for us to turn it back to our very able interlocutors on stage. I will ask both teams, one speaker from both teams, the first speakers, to try to summarize their principal arguments to respond to those issues which were either raised by your opponents or on stage or in the audience, and to bring a final note of clarity and persuasion to your point. As in the Oxford tradition, we will let the affirmative side have their last word. So I ask Steve Rasmussen to sum up for the negative. Steve, you've got 5 minutes.
We think that one of the most important issues here is the use of services. There's been a lot of numbers thrown around about reaching people, and we can, we've learned that in microfinance, how to invent the world through numbers. We're talking about a study in Kenya from a year and a half ago that showed only 4% of poor people's transactions were being used on M-Pesa, even for all the people who had an M-Pesa account. 96% weren't going on M-Pesa even then. We're talking about a situation in Ghana today where 60% of all transactions done on mobile money service are loading airtime. What good does that do us? And that is happening in a lot of places around the world. So we think this is about use that makes a difference, and we think this is about poor people. We don't think this is about people above the $2 a day line. We think it has to go below that. We think it has to go for all people, but if it doesn't get below that line, it's not going to make a difference. We have to reach them. That's the standard. So we agree with the person who talked about the issue of fraud and risk. We agree with the person who talked about the issue of the need for products that really make a difference to people's lives. We're right with that one. As to the future of technology, we think technology is agnostic. We think that it's what people allow that works. We might have not had mobile telephones 20 years ago, but we didn't have the web 30 years ago. You think 60 million people in Myanmar have access to the web today? Of course not. So it's what people do with technology that counts. It's not just the technologies that come along. Sure, we have smartphones, we have dongles, we have all these other things. You know, how far is that going to reach out and really make a difference? I mean, my daughter won't move back to Pakistan because the government blocks YouTube. You know, it's what people do with technology. It's not technology in and of itself. Technology for the haves, somebody said. We agree. We think that's where it is right now. We don't think it's there with poor people. It reflects 300 years ago with cash. You know, when cash first came in, it was for rich people. Poor people bartered. Technology today is for rich people. Poor people use cash. So the next generation of issues that come along, people talked about agriculture. We went out and looked earlier this year at all these things: agriculture, education, solar energy, water, what's coming down the road. And there's a lot more, you know, hype than there is reality at this point in time in terms of services that really, you know, make a difference. We think if game changing is going to happen, game changing has to happen. Game changing to us implies a shorter period of time. Sure, we might be willing to give it 5 years, but you know, game changing past 50 years, that's not game changing. So we've got to get this down to, you know, something that makes sense. Partnerships. Partnerships can enable, but we disagree with the speaker. The evidence tends to show that a lot of partnerships actually fall apart. Some of the biggest partnerships in this field over the last few years have been spectacular failures. So the partnership issue is tough to do. Sure, it requires it, but it's not easy. It's not going to happen automatically. At the end of the day, we'd come back to where our theme was. We think this is about people. We think it's about people who care. We think people who care will be the game changer, not technology. We think technology is agnostic. And within people who care, we think it's about institutions. We think it's about global standard setting bodies. We think it's about the providers of technology. We think it's about regulators. We agree with the two speakers who said that the regulator issue is a core issue. And unless regulators really care about financial inclusion for poor people, we don't think it's going to happen. And we wonder where the incentive is to make this work. We wonder where the incentive is for people who care to rise to the top on this one. And we agree with this person who said it's going to take bold leadership. We don't see it yet.
Thank you, Steve Rasmussen.
Good job.
Well, a fine summation for the negative side of this debate. But before you all jump to their side of
oh, I thought it was over.
Of the case, hold on for just 1 second, because Joyce has her final opportunity to sway you all. Joyce, for your final comments from the affirmative side.
Thank you. People who care have been working for the last 30 years and have reached about 10% of the poor people in the world. We're talking about billions of people. People who care, they've done great work. It's not gotten to the tipping point of financial inclusion, not even close to where we want to get to. Technology has already been created. It's there. We're not waiting for people who care to develop the technology. The people who created the technology probably don't care, except for they see the market potential. And when we get to the point that we will see the poor people as a market potential and actually have products that are useful, you know, then it will be there. Usage. A lot of people talked about usage. Clients don't use it. You know what? Poor people, they may be illiterate, they may be poor, they are not stupid. If they have products that meet their needs, and that, I might say, is the job of the industry, you know, to find the products that can ride on those rails. Technology is a tool, no question about it. It's the rails. It's the connection. It's not what goes on it. So that's absolutely true. It is the task of the industry to find out what people need and to use it. If clients perceive the product that is driven by technology to be useful, they will use it. This can also be driven through a larger ecosystem. Suppose, for example, that governments and businesses would drive their payment. Let's just start out with governments, would drive all their payments, through the technology system, so that the people who get pensions, welfare payments, salaries, and all that would essentially be what could be called born digital. So that the income that they get is on the mobile wallet or in the bank account. They'll use it, believe it. Now, initially, some of them may take it all out. As trust in the system grows, they will use it, and it will move us toward that tipping point. It sounds as though the opponents also had an argument, the fact that apparently people prefer to continue operating illegally so they don't have to pay taxes. I'm not sure that's an argument we really want to go to. The regulators. Oh, it's not going to happen because the regulators don't want it. More and more, actually, there are quite a few countries that are setting up e-money regulations precisely so that this can happen, and it can happen with the proper protections and controls for the people who use it. So, some countries are more forward-looking than others, but as time goes on and as there are additional national models to be looked at, I think more and more regulators talk to each other, find out what the benefits are of having a larger percentage of their poor population included in the financial system. And we are indeed talking about something for people under $2 a day, as well as 2 to 5, or however you want to find the middle. As that happens, as there are more models and better models, it will continue to happen. Where people are. Yeah, I mean, where people aren't. Well, where people, if there truly are no people, then you don't need anything. But, where people are, even if it's in a remote place, or even if it's in, a small village, I mean, obviously that's where you still want to be able to provide the services. So if people aren't there, you don't, this does not apply to that. I guess the last thing I would just say, and to paraphrase a famous president from years ago who gave us a justification for going to the moon, we are not doing this because it is easy. We are doing this because it is hard, and it's something that needs to be done.
Wow. Well, thank you to all four of our debaters. Let's do the vote again. I mentally filed in my head everyone's vote from last time. All who are now in favor of the resolution, please put up your hands. The resolution was, be it resolved that technology will be the game changer for increasing financial inclusion. So everyone who is now in favor of this, and everyone who is opposed. Yeah, right. Well, I mean, I think you're about 50-50, which is, I mean, you both won in the sense that I think I saw a few more hands for the affirmative, but many fewer than there were beforehand. So, ladies and gentlemen, give a big round of applause to our... So this is a learning exercise, not just a show, although we do shows too. Step out of your roles for a second, Steve and Bob. What was the most difficult argument that you thought, or the best argument that Joyce and Stefan put forward? What's the one argument here that your position grapples with most? What do you think?
Well, both of us have earned our living pushing technology, right? So,
so for instance, the conflict of interest issue would be one.
But we were very happy that Joyce and Stefan saved our jobs. But beyond that,
no, I think. Go ahead.
No, go ahead. Yeah, you say first.
I shall decide. Bob, you go ahead.
Well, no, I mean clearly, technology will enable people who care to accomplish things they might not otherwise accomplish. I mean, I think that's pretty clear. I think I do feel quite deeply about the fact that technology doesn't have this just sort of steady march to helping poor people. I mean, not sort of in our lifetime. I think it really is going to take the kinds of institutions that care and the kinds of people who care about how you get those products developed. To your closing comment, Joyce, how do you get it done in ways that are really useful? And that's something that I've at least learned over my last 15 or 20 years watching the commercial sector. It doesn't always see the same opportunity some of us see.
Right.
I think that's...
So, Steve, I would have thought that the most difficult argument really for your side would have been dealing with the cost issue. I mean, I think Bob very eloquently up front put the cost issue front and center as, in some sense, the biggest issue that the industry faces. And to the extent that technology, in fact, is going to be the big driver of decreasing costs, then it does become the game changer. Isn't that the most difficult killer argument from the affirmative side?
It's a difficult argument, but it wasn't made very strongly.
Yeah,
we were afraid it would be. I mean, it wasn't driven neither the cost nor scale, and I would say those
Right,
two
well,
issues,
two
they were
biggest
mentioned,
issues.
but it wasn't really driven.
Right.
And I would say those are, if those had really been driven arguments in this
Right.
room, it would have been hard to deal with.
Yeah.
I would say there was one other thing, it's a more minor issue, but somebody mentioned at the end about the younger generation. And I said to Bob, I hope nobody picks up on that one, because the evidence does show, and I think we're going to get change, with the younger generation.
Right.
They're just going to pick up on
This
this
was the
stuff in a way that
demographic
we
bulge
want.
issue, yeah, right.
But whether we get it for people currently, my age, I don't know, but younger, yeah.
Joyce, Stefan, same question. Where are you most humbled? I mean, what's the argument that you feel is the most compelling one that you would have the most difficulty really addressing? What do you think, Stefan?
I'm not sure whether it was the most compelling, but one which definitely is an issue is the tax implications. And you can argue, okay, we don't want illegality, but I've done some work in Tajikistan, and that seems to be like the main issue. People don't want to be in the formal sector.
Right.
And they have good reasons for not wanting to be there, not only because of tax, but also because of corruption issues, governance issues. And obviously it's also connected to a question of trust in the formal financial sector. If you don't have that, and that's hard to change, that's, it takes time. So that's definitely an argument in some countries. I think it varies a lot from country to country. And the other one, which I think is an issue, is on the regulation side, that regulators tend to be conservative, and they're often not open to new innovative approaches. As you can see in many countries, the innovation might come from players who are not used to play in this sphere, like non-banks. Telcos, and regulators don't necessarily allow them to play in that game.
Yeah, Joyce, reflections?
Yeah, I think the whole issue of usage. I mean, that really is an issue, even in people who have accounts, don't use them. And I think some of the reason is they haven't, I don't think the products maybe are appropriate, but I do think, I think that is an issue. The other thing I've been thinking about, not necessarily in response to their arguments, but sort of the argument that because of some of the negatives that are connected to it, then poor people really shouldn't be subjected to it or exposed to it because they can't handle the risks or whatever. And it's sort of for people who say, oh, our banking systems are going to heck, so why in the world would we want to have poor people be in the formal financial system? I guess my only response to that is, I'll take your argument if you give it up.
Yeah, right.
If you give up access to formal financial services, if you give up access to technology, maybe you have an argument. But to say that, we're fine, we're using it, but poor people, I'm not so sure.
I mean, it seems to me that one of the sentiments that was expressed, particularly in the audience, but also, I think, by the team on stage, was simply the notion that, it's not that technology left to evolve on its own is simply going to evolve in a way that will serve the poorest populations. That it's going to have some kind of market structure, facilitation, support.
Yeah.
Leadership was a word that was used. And that seems to me to be a very important and in some senses elemental part of the equation. And if that is in fact the case, then maybe that leadership, facilitation, support is actually the game changer, not the technology. I don't know. What do you think?
Yeah.
Yeah.
No, I agree.
Well, ladies and gentlemen, thank you for your animated participation in this session. It's clearly a multivalent issue, but with, I think we all agree, one with a lot of promise, but still with lots of complications as well. So please join me again in thanking the great sports on the stage for